Their economy's not about to collapse. They're probably going to grow 4% this year. Their current account actually gets better in this environment. But let's be clear. This is a very, very difficult time. It's actually a sad day for a NATO ally. Erdogan, to me, is not a guy I'm terribly sympathetic to. In fact, I think Turkey's done this all to themselves. But when you think about what's going on and you think about the positioning of Paribas, BBVA, Unicredito, and the exposure to that economy, you start to then worry about a European exposure. And obviously, more importantly right now for the U.S. markets, because I think the U.S. can be somewhat resilient in the face of this. And we've seen the outperformance of the U.S. market to the European markets. It's outperformed emerging markets by 17% since April. But the bottom line is, look at what the dollar did today. We got up to 96.50. The Dixie is breaking out. You're seeing the yields are starting to buckle. You're seeing this is going to impact how the ECB runs things. And I think positioning, frankly, we were at 11 VIX a couple days ago. Even though we're not in January levels, I think the market is not positioned for a big pullback.
Yeah, ironic here, David, that, August 15, we're worried about China. That upsets the market. Right. August 18, now we're worried about Turkey, the potential of upsetting our market. How concerned do we need to be about what's taking place in Turkey against a backdrop here that seemed to be smooth sailing?
Yeah, look, I think the markets today told you that. I mean, given the fact that it was really, really illiquid markets in general, I mean, we really didn't sell off much. I mean, a blip on the radar screen as far as I'm concerned. We didn't see any panic selling. Nobody's really discussing this as a main theme narrative for their investment thesis going forward, especially in the U.S., except what we hear on TV or through the media outlets. I think people in general don't believe, and I'm not saying this is right or wrong, but don't believe that this is going to turn into another European crisis.
Are you worried that it is?
I'm not worried that it is. I don't believe that it will. So here's the biggest risk. The biggest risk, in my opinion, is the U.S. dollar. The U.S. dollar staying too strong in the face of the Fed actually moving.
Yeah, but it's a two-way street.
But that's the point, right? I mean, if nobody has this priced into their models and into their thesis, then this actually does pose a risk. Maybe not Turkey in general, but if it gets the U.S. dollar rolling like it did today, that's going to be a headwind for multinationals. That's going to be a headwind for anybody who has U.S. dollar denominated debt outside the U.S. That's not just Turkey. So I don't know. To me, yeah, you don't want to say that there's a huge fire in Turkey that it's going to impact something like Starbucks earnings, but you have to watch the dollar. To me, the dollar is the new VIX. The higher that goes, the more risk we have.
Interesting thought, Guy. What do you think about that?
Delivering out for a few weeks, so Marietta's from J.P. Morgan Assets said what keeps them awake, I'm paraphrasing, but what concerns them the most are the moves in currencies. And listen, developed market currencies shouldn't move 0.5% in a day, let alone 10% in a day, 15% in a day. And that's almost become the norm. That, to me, is a little disconcerting. Now, clearly, the equity markets, today notwithstanding, haven't cared about it. But at a certain point, the instability in currencies have to be some sort of a risk factor. I think similar to what Tim is saying and BK is saying.
Well, especially the velocity of these currencies falling out of bed. Euro went below 114 today. Now, maybe it's right at that level now, but it's been a pretty precipitous slide.
You're right. 114 on the euro is a big level. Guess what else happened today? Guess who's got the highest inflation in 10 years? We do. OK, you had core CPI come out today, 2.3%. We haven't been here since September of 2008. And meanwhile, the Fed is hiking. So I get concerned about this just because I think those are trends we cannot stop. I think we have inflation. Guess what? We've only kicked up the momentum on trade tariffs this week. If you don't think that you're going to not see, forget the double negatives. You're going to see more price inflation over the next few months than you've had over the last.
Is this really going to upset this, what seemed to be a formality in terms of a march towards these new highs? Does anybody think that? Seemed like we were going to hit that, and maybe we were going to do it this week. And now we're ending the week more worried about someplace overseas than we are about anything that's happening.
Well, listen, the risk reward's not great here, right? Let's just say you're entering the market today. I don't think the risk reward is that great because we're at highs. We have a higher dollar. Do I want to put an additional dollar to work, or do I want to see how this pans out, see what happens?
Well,
I'd rather wait.
That's what we saw today. People just watching the tape, not necessarily jumping in with their new capital into names that they still may love. Just watching
the market's
things
at all-time highs, guys.
Right.
I mean, it's not new capital.
And look what happened to the market.
The positioning is, but the position.
Yeah, but not if you think the market could go to 3,000 by the end of the year, 3,100.
Which I
think.
BK's
bear
how much of a pullback are you going to wait for?
It's a little snug today. It fits a little better because we're getting, and that's
is that good or bad? I don't know if that's good or bad.
But look, guys,
my Huskies fit a little snug.
We're your big bone. We're 90% of the way through earnings season. We're at market positioning, which is not, at the Citi Surprise Index lows. We're actually at a place where people have repositioned. You're actually seeing people feel very comfortable with the U.S. market on a day like today. The VIX is at 13. Okay, so no, it's not time to jump out a window.
The VIX is at 10.
But that's right. And ultimately, if you ask me where I think there are risks, I think the same risks we had yesterday. The Fed is still your problem. The dollar is potentially still your problem. And the rest of the world right now is suffering under the weight of our tariffs.
I like that you're going there. What is the bigger risk or the biggest? Is it trade? Is it the dollar? Is it rates?
The dollar.
Trade in the dollar.
It's the dollar.
I think, look, capital flows flowing into the United States, and you see the dollar staying on this trajectory of being strong. I think is the biggest risk. I mean, Tim talks about, inflation and the impact on inflation. Look, as far as I'm concerned, you see commodity prices are going to drop under that scenario, right? So from an inflationary perspective, it should be deflationary. And that's kind of my point a little bit. Like, we could look at the Fed and say the Fed's a risk, but ultimately, I think the strength in the dollar is going to create a narrative where they can be more dovish from any perspective, right?
Do you get excited, though, when you see the 10%, which was knocking at the door at 3%, which was bullish for markets? We got to the place where we were embracing a 3% 10-year because it actually meant growth. And now, boom, we're all the way back down to 285. And you've got dynamics here, which, yes, you're right. It gets the Fed further out of the picture. And I think the ECB is even more out of the picture. But that's not where we wanted to be.
If you think the dollar, guy, is the biggest risk out there, if we collectively think that that's where we want to say,
but yes,
then you have to be concerned about
what's happening. And I think so. Just taking that one step forward, I think to me the existential risk is there a European banking crisis that will have contagion here in the United States? I have no idea, but European banks don't trade particularly well, and Deutsche Bank, which by the way has rallied over the last couple of weeks, seems to be headed right back down to a 10 handle like it was back, I think, May, June. So if you're asking me what my biggest concern is, it's European banks.